Hello everyone, this is Matthew Frailey, founder of Breakpoint Trades. You know the drill. Been here for 21 years, providing advanced technical analysis, market commentary, trade ideas, and access to our amazing mechanical trade systems. Anyway, let's get to this market newsletter video at hand. It is Monday, November 18th, and this is our back-end recorder for our subscription website-based service. I'm going to go ahead and get that recording started now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Monday, November 18th newsletter. Tonight's newsletter, as you can see, divided into 6 major sections. Same theme as I always keep. We'll have our opening discussion on the market, then we move on into some of the mechanical trading systems. We have a couple open systems breakout for the SPY and MES futures. Late last week, we had some really nice trades on our volatility systems that all closed out of shorts. 7 of them went short on Monday. They closed out last week. Anyway, then we'll get back to the general market analysis. We always do a top-down approach. Then we'll look at a few important indicators. We'll look at a few market sectors: US dollar, Japanese yen, Bitcoin, cryptocurrencies, commodities, precious metals, GDX, gold, silver, and follow up with some trade setups. I didn't add any new trade setups tonight, guys. Got enough to discuss here. And again, Steve Nelson did the extensive weekend newsletter, so hopefully you watched that. And I'm going to cover a few of the charts that he discussed. You know, for those of you who are on YouTube and you don't have a subscription service here, again, you should consider subscribing so you can get access to all of our stuff, not just a couple YouTube videos a week. All right. This week, guys, again, Nvidia is the big one. All right. All eyes on Nvidia earnings on Wednesday. Okay. They need to come in outstanding to keep this market going. So we'll see how that goes. As far as the market, like I said, market's had a nice pullback over the last week. The S&P 500 is still holding its 20-day moving average for now. This is typically the bullish time of the year. It doesn't mean the market goes up. However, we can count 5 waves up. You know, you can count this whole move up completed. So the onus is on the bulls to get in here and keep this thing going. Like I said, all eyes are on Nvidia. It's going to be a big one, guys. And other things, like I said, Bitcoin's had a great run. That $100,000 mark, round number, is still a magnet. US dollar has been super strong, as has the 10-year treasury yield. Honestly, the market really needs to see those two pull in to have some hope at some sort of rally here. And precious metals has sold off. They got quite oversold. We saw a bounce in that today. But let's go and get started with things. So first off, let's just talk about the systems real quick. So this image here shows you the various mechanical systems. Currently, we have an open breakout trade on both SPY and MES futures. They're in second entries. They took a second entry on Friday. We had a little bounce today, but again, we'll see where this goes. If the market does continue selling down, this will likely stop out soon. It does have a stop, and I'll inform you when those stops are hit. As far as the volatility systems, last week we had 7 of them went short on Monday, which I thought was very telling for the market as some sort of pullback, which we got. Market pullback pretty nicely last week. So the volatility systems, all 4 of the indexes triggered. They all closed out very nice trades, as you can see. Those are going to be, I don't officially send out trade notifications for these yet, but they eventually will be an official part of the website. But however, for the last few months, I've been posting these on our trading community blogs so that our subscribers can see how they work, and they've been doing very well. Okay, they'll be excited when we can eventually add these to the website. I'm developing 3 more volatility systems, so we're going to have a total of 15 volatility systems. They'll likely do about 100 trades a year, which will give us a lot of activity, and especially for you system traders out there, you have plenty of action. Next, Moving back to the general market newsletter. So image number 3 shows you the index sector table, what transpired today. Again, you can see slight gain for the major indexes except for the Dow. Again, we were quite oversold going into Friday of last week. As far as the 21 market sectors, the majority were up. There's a few down here. No real big moves here. Biggest one was the metals and mining, up 2.1%. Otherwise, most of the moves were, 1% or less. Currencies, US dollar, finally a pullback. As you know, that's been a screamer since the September lows, down about 0.5% today. Bitcoin bouncing back today. It's at 91,400. Remember that 100,000 round number is a magnet. It also harkens back to stocks. You may have heard the adage that if a stock gets up into the $90 range, it almost always hits $100. Well, the same thing here. I think crypto is eventually going to 100,000. It just seems, like an easy target. As far as commodities, well, most commodities were up today except for coffee. Otherwise, big bounces here today in the commodities, obviously helped a little bit by crude oil. By the falling US dollar. Precious metals had a nice rebound today. Gold up 1.9%. Silver up almost 3%. GDX, the miners, up 4.25%. Again, this area has had a pretty good sell-off for the last few weeks. Finally bouncing back today. It was quite oversold last week. I'm thinking now these start a rally, but I think overall this rally will form a lower high. So I don't think the bottom is in on gold or anything, but doesn't mean you can't get a bounce trade out of it here. As far as the bond market, like I said, slight pullback in the 10-year. Honestly, the market really needs to see that also to start pulling back as well. Next. Image number 4 shows the economic news calendar. Like I said, guys, really the big one this week is Nvidia on Wednesday after the close. All right. Otherwise, you can see what's on the docket here. Housing starts, building permits tomorrow. Blah, really not too much there. So again, that's the big one. Nvidia earnings on Wednesday. And let's jump to the charts. So first chart below, item number 5, here's the Nvidia chart. And you can see it's pulled back over the last week and a half from those highs. It did make new all-time highs there. That high did set up a pretty good MACD divergence here. Otherwise, you can see the nice pattern that we had here. You had ping-pong action between the supply and demand zones. Really excellent. There was a beautiful coil that set up. A, B, C, D, E, 5-wave coil. Wave E tends to be a higher low inside the coil, which is just an outstanding long. Now, the onus is on the bulls here. Remember, earnings are on Wednesday. Chart number 6. Now, here's a more ominous way to look at Nvidia. You can see a rising wedge. And again, the wedge has MACD divergence. True wedge patterns do have MACD divergence, so it is a valid pattern. You can see a slight poke below the wedge. Again, earnings can trump the chart. Like I said, this wedge may play out and we get a big gap to the downside, which would cause a big sell-off in the market, or it could just come rallying back and make a new high and invalidate this. So earnings can trump the chart. Like I said, Wednesday, November 20th is a big day. Chart number 7, here's a weekly view that Steve showed on the weekend. So again, Nvidia has had one hell of a run since the 2022 low. That said, you can count 5 waves up, so eventually this pattern will complete. You can see the MACD divergence, and you'll have a deeper retracement after that. Now, question is, does that start now, or does this wave 5 still extend for a while? We'll see. But you have the MACD divergence, you have the RSI. We are in the bullish time of year, so we'll see. Okay, anything goes. Next, chart number 8. Again, guys, the market isn't cheap fundamentally. So here's a chart of the S&P with the earnings. The earnings in red represent a PE of 20. And, late over the last several years, every time we dip down into that, this tended to be major bottoms. You don't typically dip into these lower PEs, 15, 10, unless you have a really gut-wrenching sell-off like 2008. But the 20 area, when we pull back, go below that, that's been great bottoms. You can see 2022, it happened twice. 2020, obviously, on that COVID. 2018. But look how far the S&P now is above current earnings. It is way up there. This is a wider gap than you saw even back here in these previous times. So again, things aren't cheap. Again, this isn't a sell signal or something to trade in the short term, but eventually we are going to need to see a mean reversion on this. You know, the next cyclical bear market. And maybe that'll be 2025. You know, if that occurs then, poor Trump will be blamed for it. Next. Moving on to the index chart. So chart number 9, here's the daily view of the 5 key major indexes. Again, you can see, we had made the new highs a couple weeks ago. Last week, we pulled back all week from those upper Bollinger Bands. Okay, basically right around near the middle Bollinger Bands on the S&P and the Qs. The IWM small caps, which outperformed, has had a pretty good pullback as well. It's essentially back testing now. If you extend this trend line as ascending triangle, it's essentially back testing this area. That is now potentially support. So let's see if it can rebound off of there or not. Moving on to the S&P 500 charts. Here's the weekly view of the S&P. Remember, we had that really good rally off that demand zone a couple weeks ago. Last week we pulled back strongly, so we're just kind of hanging around here. Technically, this is, if you know your candlestick patterns, this is a dark cloud cover. And this exists on the other major indexes as well. We do have the MACD divergence here too. So it is something to be aware of, guys. Next. Chart number 11, here's another weekly view. Now, Steve shared this on the weekend newsletter. I'm just rehashing this for those of you who are on YouTube. Steve doesn't do the YouTube videos. So here, he spent some time in Elliott Wave. And under this count, you can see we are potentially completing this wave 5 of 3. If this is the correct count, we could eventually see a deeper wave 4 pullback here. And this could even occur, like let's say Nvidia earnings come out, negative, market doesn't take it good. They could easily come down into here before the new year as a wave 4 before you then recover as a wave 5 to a new high. So just something to be aware of. Next, chart number 12. Here's the monthly view going back to 2008. As you know, that was the bottom of that secular bull market. We've been in a secular bear market. We've been in a secular bull market now for almost 16 years. And technically, you could count it as a completed wave. As a wave, we're working on a wave 5 of 5. Again, the problem with Elliott Wave, there's always multiple variations of counts, but it is something to be aware of and to monitor. All right. Should the market continue going higher, perhaps the upper channel line would be the next target. You can see we're not too far away from it. Next. Chart number 13, here's the S&P daily KISS trend system. So remember, this is still long. Its current trailing stop is 57.95, or smart trailing stop. System went back long in early August. You can see it's done a damn good job about essentially keeping you in those uptrends. Yes, it gets out sometimes, but gets right back in. Sometimes it gets back in lower than where it got out. The beauty is when you have a really strong correction, like a 20% correction, or like we had in March 2020, where we had a 30% correction in a month, the KISS systems will keep you out of that. And of course 2008, stuff like that. But anyway, that's the stop. It's pretty tight. We're still got a little room here, but stop. There's still plenty of room here. Next. Chart number 14, here's the 4 time frames. So the daily here, we've had those resistance cycles since last Monday, and that has capped price so far. And the last time, price bounced off the support cycle. Okay. ATR here is getting close. That's a support. Here's the half day. You can see we had a DeMark 9 and resistance. Price pulled back off that resistance perfectly. Then we had a DeMark 9 on the sell-off, and now we have a couple of support cycles. Support cycle here on the 130 minute. You can see we're below the ATR on those time frames. Next, moving to the daily charts. I'm going to show some various various scenarios Steve showed on the weekend. So here's the daily, just without any wave counts. So again, we had that high at 60.17, little black candle doji, nice pullback. Added some fibs here. You can see we're bouncing or trying to find a little support around the 50% fib and 20-day moving average. Below that, you have the 61.8 fib, the uptrend line here, going back to the August lows, and the 50-day moving average. Really, the bulls need to hold that. Still got a little room there. Next, chart number 16, here's another daily view of the S&P. This one shows a potential fifth wave high, ABC of wave 5, and we've pulled back. Again, just something to be cognizant of. This one, you can see the longer support is this lower trend line way down here. Next, chart number 17, here's a 2-hour view version that Steve showed on the weekend. Again, guys, don't get too bogged down into this. I'm just showing you various scenarios. Chart number 18, here's the very bullish scenario. So the scenarios I showed you above potentially point to a pretty major, a decent high. This would be the super bullish one. This is a nested 1-2-1-2. So you could see you had the wave 4 pullback there from July to August, and it was an ABC 3-wave. Then you're now started a 5-wave uptrend. This would be wave 1, 2, 1, 2. You see how this breaks down into its fractals, where this would be a minor wave 2 pullback. It should form a higher low, then rally again and continue in the wave 5. So perfectly valid as well. But again, for this, you really don't want to go below this channel line here, because then your wave 2 is getting too deep. But anyway, this would be your very bullish view. And chart number 19 here shows you the same thing, shows you that potentially bullish view. Now, for now, we're kind of viewing that nested 1-2 as an alternative, but we'll see. Otherwise, your pivotal key support is this 5,700. Obviously, that's quite a ways away, over 150 points, almost 200 points, but that's the big major support. Chart number 20, here's a 2-hour view of the S&P. Again, nice pullback last week. Bounced off this 50% fib for now. Notice there's an open gap above, and of course there's an open gap below. Chart number 21, here's a 60-minute view. So right now, you can see we have 3 waves to the downside. The bullish view would be A, B, C, or the bearish view would be 1, 2, 3, with this maybe being a wave 4 bounce. Kind of looks like a wave 4, really. We filled that open gap last week on that sell-off. By the way, there's an open gap now to the upside here, and there's one to the downside, which we got a little bit into last week before bouncing. Chart number 22, here's a 30-minute view. This shows you the bearish view, wave 1, 2, 3. We're working on a wave 4 here, which should eventually fail, then go down in a 5. So there you go, guys. Again, Nvidia would be a catalyst either way for these variations, up or down. Chart number 23, here's the triple Q's KISS system. Again, no changes here. Nice pullback of the last week. Still holding that ATR, still holding the smart trailing stop. So this system is long. Next, chart number 24, here's the 4-timeframe. It really looks identical to the S&P. You can see the resistance cycle, which we pulled back from on the daily. The resistance cycle on the half-day we've pulled back from, and the DeMark 9 and support cycles, etc. Next, chart number 25, here's the daily triple Qs. Again, nice pullback. This is a demand zone down here, 50-day moving average. Really need to hold that. Pivotal support. Chart number 26, here's the weekly triple Qs. Like I said, really nice uptrend channel. We do have some pretty good MACD divergence here setting up. Again, that is not a sell signal on its own, just something to monitor over time. Next, chart number 27, here's the half-day chart. Again, you can monitor this uptrend line. We'll see if this can hold this week or not. Chart number 28, here's a 2-hour review with the fibs. You can see we got down a little below the 61.8 before bouncing. So far, this bounce, guys, looks kind of, like I said, like a bear flag. Same on the S&P. And moving on to small caps, IWM. Nice pullback here in IWM. That ascending triangle played out for a nice rally. Now it's almost back testing the previous resistance. Now we'll see if this can act as support. Honestly, if you got out of your IWM up there, congrats. Now you want to look and see if you can get a low risk buy down here with a tight stop. Remember, in technical analysis, a lot of times when you break through resistance, you come back to back test it. So this is the hope for the bulls that the IWM can find some support here. We'll see. And chart number 30, here's the 2-hour view with the fibs. You can see pretty nice pullback all the way to the 61 fib before bouncing slightly. And there you go on the indexes, guys. Let's go ahead and move on, get through the other charts quickly. Here's the VIX. As you know, over a week ago, the VIX gave a VIX Bollinger Band sell signal on the S&P 500 because it was trading below its lower Bollinger Bands for 3 consecutive days before closing back inside. And that was a good sell signal. As you can see, we sold off all last week before bouncing today. The other thing that showed up late last week was the VIX became uncorrelated to the S&P. You could see it on the correlation indicator, how it spiked down. Now it's back up. But, the VIX Bollinger Band buy and sell signals have been outstanding. Obviously, not many sell signals. This is the only sell signal I see so far this year, but all these buy signals worked out great. And by the way, that's what the volatility systems are based on. They're based on the ETF with their respective volatility instrument. So the VIX for the S&P, VXN for the Qs, etc. All right, but nice signals from this VIX system. Moving on, chart number 32, here's a 60-minute view of the VIX. The VIX really likes to fill these gaps, as you know. You can see I kept all these in the past, just showed you gap filled, gap filled, gap filled, gap filled. Well, remember there was this unfilled gap up here? Well, that was filled last week, clearly. We had a really good textbook MACD divergence there. Price even got into that next gap before pulling back. Now, if the VIX needs to go and fill this gap, then we're looking for quite a bit more downside in the market, so just be aware. All right. Next, chart number 33, here's a breadth indicator that was showing a warning before this pullback. This is the NYAD, advanced decline issues. And you can see, and below here is the S&P 500. You can see the two move lockstep with one another. But what you want to look for is divergences. And you had a lower high on the NYAD, but a higher high in the S&P. So that was a divergence, and you can see so far it's played out for a pullback on the S&P. Let's move on and look at a few of the market sectors, the important ones. Here's XLK Technology. Still has this kind of wedge looking pattern. Now we're at the bottom of the wedge. We'll see if that can offer some support. I mean, you could count this wedge completed, wave 1, 2, 3, 4, 5. Or you could still get another move up in here, but there is critical support here at the 50-day moving average uptrend line. We'll see if that can hold. One area that's been really weak on the market is the semiconductors. They broke down, a little bounce back today. Again, Nvidia is a major component of this, so it's going to be a catalyst either for a shot to the downside or rebound. Chart number 36, here's XBI Biotech. Well, it had kind of a Pinocchio move here, bull trap to a new high before selling off in a gut-wrenching move. The Russell 2000 pulled back, which biotech tends to follow that. But also, those rising rates don't help this area. So this area got smashed. Well, again, let's forget the elephant in the room. With Trump winning and he's going to install Kennedy into that position, pharmaceutical and a lot of biotech stocks really sold off hard. So that's really, honestly, that's really why a lot of this sell-off was so strong. Again, eventually this is going to have a little rebound. You could see a little doji candlestick today. Chart number 37, here's the banks. Banks and financials have remained very strong. This ascending triangle pattern I identified back in October has played out amazingly. And you can see 5 waves. You see that? A, B, C, D, E. Textbook. Again, these areas are getting a bit overbought though. Chart number 38, here's transports. They're still holding up pretty good here, pulling back. Got a lot of support down below. Chart number 39, XLI Industrials. You can count 5 potential waves up. Be aware. Again, wave 5 could extend, right? This could be a wave 2 pullback of 5, but just be aware. Chart number 40, healthcare. This area has really been tranched, as you can see, well below its 200-day moving average. It's been downtrending since September. And chart number 41, real estate. It's mostly moved sideways here, kind of a three-wave pullback. There's a big demand zone down here, but we'll see. See if this can hold this and try a rally up. It's going to depend on the market. And the energy market, here's XLE Energy. It continues to do quite well here. It's been in a long consolidation. While crude oil has been weak, this has held up quite well. I do like the weekly chart, which I'm not showing tonight. It's in a big coil. And chart number 43, here's oil services. Last week stalled at the 200-day moving average downtrend channel line, but it's holding up. Right now, it's holding up fairly well above these 50-day, 20-day moving averages. And a couple other things. Here's the Chinese market. Haven't looked at this in a while. As you know, China market had a huge rally off that September area when Chinese market came in to stimulate their stock market. Big run up and then a big sell off. Right now, though, the bulls hope here is you got a three-wave ABC pullback. Okay, we'll see. And the leveraged view would be yen. That's the triple. If you want some leveraged, I took a shot of this. I got to stop right here at this recent low. Again, I'm either going to be stopped out or it's going to be a nice winner. We'll see. Moving on to commodities. Here's DBC, commodity ETF. Rebounding today, up 2.25%. Again, most commodities were up today, guys, except for coffee, I think it was. But everything up nicely. You can see this has been in a 2-year consolidation, essentially. Chart number 47, crude oil, came back nicely, up 3.4% today. Otherwise, it's still in this big pattern that's been forming for the last year and a half. Chart number 48, UNG natural gas. As you know, 2 weeks ago, I pointed out this falling wedge. It gapped out of the wedge, chopped around here. It's still holding up here fairly well. If you're long this, I'd put a stop probably just below that 1307 higher low there. Chart number 49, copper, bouncing as well. Copper's been downtrending now for quite a while. But a little bounce back today. Chart number 50, DBA, agriculture ETF, continues to move up. I've counted this as a completed ABC here. By the way, the KISS high performance system's been long, so far this is working up. Not a great thing though for grocery store prices, seeing these agriculture stuff moving up. Uranium also had a good day. I don't have a chart here tonight for that though. Moving on to the bond market, here's the 10-year Treasury yield. Nice pullback here. You can see we have some MACD divergence, some RSI divergence. Honestly, if this could start breaking down a bit, that would help the market. Chart number 52, here's the weekly view. Again, nice ABC on the weekly. Nice rally off that demand zone from back in August. But we'll see if it can pull back here. Chart number 53, here's TLT 20-year bonds. Been in a big sell-off. Bounced back a little bit today. You can see those symmetrical bounces, no symmetry break. There is a pretty good MACD divergence here. Again, the bulls need to see. We need to see TLT rally and break through this downtrend line. TMF, that's the leveraged view of TLT. It's the triple. Here, one way to label it could be a wave 5, 1, 2, 3, 4, 5. I took a shot going long this today. I put a tight stop right at our low. So I'm either going to be stopped out or I'm catching a low. But anyway, it's an aggressive trade, but I took a stab at it. So we'll see. And chart number 55, high yield corporate bonds bouncing back. You can see they pulled back, but so far they found support at that demand zone, bouncing back here. Honestly, if you're long this, you could put a stop right there at that 79 higher low. Chart number 56, here's the 2-hour review I've been showing. Pretty textbook. You can see you broke this downtrend line, big rally up, pull back tested the broken trend line, and then rebounded off of it. Moving on to crypto, here's Bitcoin, was up today, 500 points. Remember, that 100,000 isn't too far away, so I still think that's going to be tagged sometime soon. Chart number 58, IBIT, one of the ETFs for Bitcoins. Nice, again, same pattern. And chart number 59, Bitcoin on the weekly. Like I said, absolute textbook wave 4 pullback there in July into that demand zone, which we've had in place since then. So this chart that we've had in place is played out. We're just working on this wave 5. 100,000 is imminent. Chart 60, here's Ethereum. Haven't showed this for a while. Broke out of this little pattern in mid-November. Now it's chopping around. Moving on, US dollar. So little pullback today. Again, dollars had one hell of a move off that divergent low. Now we'll see if this can pull in a bit. Chart 62, there's the weekly. Again, you can see why the dollar rallied. That was big critical support. You can see from previous areas, and nice rally up. It is stalling a little bit here at this resistance area that I noted last week. Moving on, chart 63, here's FXY, that's the Japanese yen. This is the weekly chart, just showing the breakout and back test. So again, this is also potentially a low risk long with a fairly tight stop. Here's the daily chart. You can count potentially 5 waves down. You have some active divergence, so one could, if you're aggressive, one could attempt a long here, put a stop at that 59 low. Now, moving on to precious metals. Here's gold. Nice rebound on gold today, up 1.8%. Okay. Last week it was quite oversold. You could see it sold off the last 3 weeks, breaking a couple trend lines. Little doji there. I favor some sort of any decent rally here. I'm favoring a lower high. We'll just see how far it goes. I put some fibs here. You can see you have the 50-day, 20-day moving average. That would also be a big resistance confluence. So Steve and I both took a shot buying gold late last week. We went long UGL. But again, I am looking for a lower high. I'm not looking for this to go back to the highs yet. I'm looking for a lower high, then down again. Then I think that's the time to back the truck up. Chart 66, here's GLD. I'm just showing you this, guys, is things I look at. So gold was quite oversold late last week. So on the 60-minute time frame, I saw the MACD divergence here, and that's why I took a shot going long. Okay, I like to look at the intraday charts, look for some divergence as confirmation. Next, chart 67. Here's a chart Steve showed on the weekend. So this is the count we've been favoring, this major that we are completing a wave 5 of 3, and that we have started a major wave 4 correction. So we've had the initial decline. We've started to bounce here. So I'm looking for a rally, lower high, then come down again. That should complete wave 4. Then rally to new all-time highs, get to that 3,000 number. Okay? So case in point, you can play a bounce here, but then I'm looking for it to sell off again. And once that's complete, man, I'm going to look to buy a ton of gold because I think it goes up to 3,000 or higher. Next, chart 68, there's the weekly view of gold. This shows you that wave 5 of 3 we've been showing, okay? And starting that wave 4 pullback. Next, chart 69, here's silver. Silver's at a nice pullback, but you can see did bounce off that 61.8 fib. I call that the master fib. Nice bounce off of that. Chart 70, here's a weekly view Steve showed on the weekend. I mean, you could count 5 waves up here. So just be aware of that. But that said, longer term, I still believe silver will go much higher. Here's my monthly chart I've been showing, this coil that we broke out of. We've pulled back from that first supply zone, obviously. But again, over time, I still stand to it that silver is going to work back to these upper levels. Here's the big picture view of silver going back to the mid-1970s. So you can see, again, logically, after breaking out of that coil, we stalled the supply zone. But I still think over time that silver will go back and test that 50 area, which it tested 2 times in the past. Once in 2011 on that blow-off move, and once on that blow-off move from the Hunt brothers when they tried to corner the silver market. That's long-term though, guys. And GDX miners, they've had a nice correction over the last month. But last week, tagged that 200-day moving average and 50% fib. So that was a low-risk area to take a shot on the long side. Bounced today. Notice there's an open gap above. That's one target area. But again, just like on gold, I don't view this as a major bottom yet. I view this rally as some sort of lower high. Maybe, I think it at least fills the gap. maybe it gets up to these 50-day, 20-day moving averages or channel and fails there. Chart number 74, here's another daily chart, shows you a similar thing. Here's another channel you could draw, so that channel line is also a potential resistance. Here's a 60-minute view of GDX. Again, nice rally last week off that divergent low. The ratio trend line broke a bit. So far, we haven't had a symmetry break. The largest bounce in the downtrend off the September highs was about $2.30. So far the rally only about $2.10, so no break in symmetry. All right, guys, let's move to the final part of the newsletter, the trade ideas. A couple of dividend plays, TCPC. Remember I mentioned this dividend play weeks ago when it was back in this range, the bottom of this range. The way I like to play these dividend plays, guys, I like to buy them after a correction. Okay. What I don't do is buy them just before the ex-dividend date and sell after. You just spin your wheels when you do that. So they're best to buy after really nice corrections. This was a big support. Congrats for those of you who bought it. I know quite a few of you did. It's a nice rally off of there. The next dividend isn't until mid or early December, so still a ways off. But nice rally off that area. That one pays about a 16% annual dividend. And here's GMLPF, another one of my dividend plays. Massive move today, up 21%. So you could see this one's just been going sideways, so I didn't mind holding it. It pays quarterly. It just paid in November recently, but huge move today. Don't know if anyone had this. I luckily had some of this one. Moving to others, here's Tesla. As you know, Tesla's had a big move here. It's obviously benefited from the Trump win. Rebound today. You can see it rebounded right off that 9 EMA. That's always your first support. Chart 79, here's Microsoft. Still in this kind of pattern here. It's been weaker lately. Chart 80, AFRM. This is one of our subscribers put this out last week. Arun, I think. I charted it. Really nice long-term base. You can see it actually followed through nicely today, up over 10.5%. Chart 81, Rocket Lab. I mean, boy, this has been a rocket. We had it as long back here in June and August and September, and boy, we also had it again in October. So we had it 3 times on our watch list. Honestly, it's been best just to hold it, and boy, has this had a hell of a move here. Chart 82, UNFI. This was a beautiful setup from last week. Now it was up all the way to 23.50 today. Gave you a fantastic trade. Unfortunately, pulled all the way back almost. I managed to take some off today. I know Steve day traded it out. Again, not everyone's a day trader, and I certainly understand that. Most of our subscribers actually work jobs or are retired. But anyway, it could still recover here, but sucks to see that retracement today. But it was a beautiful pattern. Next, chart 83, Starbucks. This has been on the list for a few weeks, and I'm still continuing to hold this. It's just been chopping around here. So nice to see a little rebound today. Chart 84, JVA. Had this on the watch list. This would be the bullish labeling, this A, B, C, D, E with a higher low. That's your bullish labeling. Chart 83, Intel. This has been a setup for a few times as well. Still looks okay here, honestly. Chart 86, Mobley. Wondered if some of you still had this. We had it as a long idea back here in October. Rallied up. Pulled back. You could see it pull back to this area, which became previous resistance became support. Rebounding. Buying patterns still look good. There's an open gap up here, which I'm still targeting as a magnet. I still own some of this one. Chart 87, ECVT. This was a beautiful setup back in October as well from this wedge. Beautiful trade. It hit my first target fill in there. I'm still watching it. It's still kind of flagging here. It's still above the 9 EMA. If it can pop again, there's a gap above. All right, guys, so we'll see what happens this week and with Nvidia. That'll do it. Again, thanks for all your support. And Thanksgiving's next week. Anyway, take care. Have a good evening.